Good morning, I'm Peter Milios from the Finance News Network. The S&P 500 notched a fresh record high on Friday as quarterly results from technology companies including Facebook parent Meta topped expectations and the January jobs report came in much better than expected. The rise in tech stocks helped shift investor focus from a scorching jobs report earlier on Friday that spiked interest rates. The benchmark 10-year Treasury yield jumped a whopping 17 basis points to 4.02% after the government reported the US economy added 353,000 jobs in January, well above the Dow Jones' estimate from economists of 185,000. The report also included inflationary data in the form of greater than expected wage growth. Wages expanded by 4.5% year over year, more than a 4.1% forecast. This report and comments from the Fed Chair Jerome Powell on Wednesday likely pushes the chances of a rate cut back to May or the second half of the year. But investors instead focus on the resiliency of the economy and how that would keep boosting profits. Overall, the broader market index added 1.1% above its previous record close, reached on Monday. The Dow Jones Industrial Average added 0.4%, also a record close. The Nasdaq Composite climbed 1.7%. Shares of Meta popped more than 20% after the social media giant's quarterly results topped analyst expectations. The Facebook parent also announced it will pay a quarterly dividend for the first time, and it authorized a $50 billion share buyback program. Amazon shares jumped 7.9% on a fourth quarter earnings beat. The regional bank slide halted on Friday as the SPDR S&P Regional Banking ETF rose by 0.4%, reducing its weekly losses to approximately 7.2%. New York Community Bancorp shares also rebounded by over 4% on Friday, despite being down more than 40% for the week, following concerns about commercial real estate loans impacting bank earnings. For the week, the S&P 500 added 1.4%, the Nasdaq Composite gained 1.1%, and the Dow rose 1.4%. It was the fourth week in a row of gains for the major benchmarks after a stumble to start 2024. Along with surging rates, the market shook off a tepid Apple quarter. The shares sat out the Friday rally and closed essentially flat after the iPhone juggernaut posted a 13% sales decline in China. Overall, US sectors were mixed on Friday. Communication services was the best performer, closing almost 5% higher. Utilities was the worst performer. Shifting to the Australian landscape, the Reserve Bank of Australia is expected to keep interest rates unchanged in its upcoming meeting due to ongoing domestic price pressures, with a potential rate cut not anticipated until 2025 or late 2024 if inflation and unemployment data warrant it. Michelle Bullock's post-meeting press conference will be closely watched for any shifts in the RBA stance as the focus shifts away from rate hikes towards the possibility of future cuts. The SPI futures are pointing to a 0.7% fall. Thank you for listening.